What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to push higher as we are now officially entering the bull market phase and we are approaching some very critical resistance levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today's episode is going to be extremely important, so make sure you're paying very close attention. And the first thing I want to remind you is that we are now officially entering the bull market and we are going on a back-tested signal that has been correct over the last 35 to 50 years with a 100% success rate. So the odds are damn good that we are out of the bear market and going right back into a bull market, and that is exactly why you are seeing such bullish price action with a very resilient bull trend. Remember, smart money moves the market. And when you're getting a market that looks this bullish, that is because smart money is behind the move. So you need to make sure as a retail investor and trader that you're riding the waves and not trying to go against them. So you can see here on my chart is that I do have the bull market signal level breakout, and I also have the average drawdown from the signal date and the max drawdown from the signal date so that we have realistic expectations if we do start to break support and see a drawdown. Now keep in mind, just because we have the average drawdown does not guarantee we need to go down to that level. And if you haven't seen, Michael Burry has officially liquidated his portfolio, which was mostly short positions. So even one of the biggest bears that many people like to follow has completely given up on his short positions. And that goes hand in hand with the backtest that we are likely entering a bull market, which I'm sure he is well aware of, and that is why he is no longer shorting this market. So be very careful when you're following fundamentalist bears, because they are going to lead you down a very destructive path that is going to cause you to lose a lot of money. Remember, by nature, the stock market is designed to go up over long periods of time. So the only position you can safely hold over long periods of time are long positions. You cannot safely accumulate short positions hoping that the stock market crashes, because if the stock market continues to run away, you are going to lose all of that money because there is no guarantee the stock market has to go lower. It is engineered to go higher by nature, and that is why the S&P 500 is indexed, and that is why it is well diversified with a very strict plan on which stocks can join the S&P 500. And it is very easy to remove companies and add in better companies when they start to underperform. So there is a very real possibility that from here, we could continue higher, defeat the bear around SPY levels of 433, and then start to enter some type of consolidation bull flag period, which can completely destroy your short positions before we get the next leg higher. And this is going to be a very gruesome scenario if we do indeed get this sideways consolidation. And this is still a type of correction. So just because you think the market is overextended and that it should not be going any higher than this, something like this that goes sideways in a triangle and eats time off the clock will completely reset all of the technicals and allow the bulls to push higher. And it could all happen above our signal level at SPY 421, meaning that we don't actually see much more drawdown from Friday's close. Now there is still the possibility from Friday's close that we reach at least the average drawdown, so I cannot completely rule that out as a possibility, but I will tell you, if you are going to use that scenario, your signal that we're going lower will be the break of our support trend line, and not any sooner than that. If you try to front run a down move, that is trying to call a top during a bull trend, and that is very difficult to do. And if you incorrectly time your short positions, you can actually lose quite a bit of money because you never know how high we're going to go and where we're going to pull back from. For example, if SPY just went straight to 350 and then started to pull back, that is still going to look like a 6 to 7% drawdown from the peak. And that is still a very significant pullback in the S&P 500. But as you can tell, it's all relative to where the peak is before the pullback begins. So be very, very cautious shorting this market. And as you can tell, we are getting very close to closing back over the 200 simple moving average, which is going to be another one of those levels that a lot of people are going to likely start saying the bear market is over once SPY closes above that level. And from today's close, that is only about 0.7% away, which is completely possible by tomorrow. So just remember, if you are bearish because of fundamentals and you are completely ignoring the chart, do not forget that as fundamentalists, you are going to eventually see a bull market when we get one. And as we see this bull market breaking out, confirming the bear market is over, confirming the next higher low, and then confirming the next higher high, and then we start approaching the previous all-time highs, you are still going to lose all of your money. And then those same fundamentalist bears that told you to short the bull market are now going to tell you that the bull market has gone way too far and it's just way too risky to buy near the top because the valuations are too high. And then you are going to be sitting there wondering why the hell you shorted the whole entire bull market, why you missed the whole entire bull market rally, and then you are going to be completely disgusted at the idea of trading and investing, and you are likely going to walk away from the game for the rest of your life because you had such a horrible experience. What I am teaching you to do by following price action and managing risk allows you to trade any market condition, and 9 times out of 10, you will be on the right side of the trade, and you will minimize your losses, and you will have very healthy profits because you will make way more money than you lose over long periods of time, and that allows you to be a profitable trader. So I have given so many warnings and I have made so many additional videos on why we are likely going back into a bull market, and I'm going to continue to warn you and walk you through this process day by day. So just keep all of this in mind and make sure you are checking your bias at the door, because there is a real possibility that the stock market is about to absolutely burn all of the retail bears, and that is going to be a very catastrophic event if you are on the wrong side of the trade the entire time that the market goes higher. Remember, if we break any critical support, we will see it on the chart. We will see the price action breaking down through support, through our support trend line, and down through any critical support levels. And we can instantly get more risk off by just hitting the sell button on our positions. And then we can manage when our next entries will be. And if we do return to a bear market, we could even short the market on the way back down. So do not for a second think that just because you decide to go in the direction of the trend, that you are locked into that position for the rest of your life. You are always going to be able to manage your position, and that is why I always give you critical risk levels and critical support to manage your risk from. So I know I spend a lot of time going over all this additional information, but I truly think it's important that you understand these concepts, and if you are going to continue to short this market, just make sure you understand the risk. Alright, moving forward, we're going to speed up, and on SPY right now your risk level is at SPY 421, and you are instantly getting more risk off below that level. And below 421, you're looking for support at 416 and the gap close at 413. And do not forget, our average drawdown from the backtest is still 5% from Friday's close. So that is where you will want to manage risk from moving forward. The next critical resistance is going to be where our bear is hanging out, which is now right around 432 and 435. So if we break above that resistance, that is going to be the final confirmation that we needed to say that the bear market is officially over, because that resistance trend line defines this bear market. On the NASDAQ 100 triple Qs, we were up 0.81%, and we're very close to our next price target at 334. And if we do get a bullish gap up overnight, the bulls will try to use that level as support and push all the way back up to the 200 simple moving average at 342, with the next critical price target above the 200 simple moving average at 348. To the downside, you want to set your risk right around 324, and if we break below 324, look for the gap fill at 319 and support right around 314. So you're instantly getting more risk off if we break down below 324. So set your risk at that level and stay bullish above that critical support. On the Dow Jones, we were up 0.46% and we closed back over the 200 simple moving average. So you can see the Dow Jones is already confirming that we're likely breaking out, and you will want to manage your risk around this support at 333. Below 333, we can close the gap at 329. And we are going to have very critical support in that zone because we're also going to have the 20 simple moving average. The next upside price target is 341 and then 347. On the Russell 2000 IWM ETF, we were up 0.35% with the second day in a row closing back over the 200 simple moving average. So you could see the small caps continuing to lead the way higher, with the next critical resistance just above at 205 and then 207, with critical downside risk and support at 196. Below 196, you're getting more risk off for the gap fill at 192 and the critical support at 191. On the ARKK ETF, we're up 0.35%, and ARKK continues to bash its head against resistance at 52, and it's not going anywhere until it breaks above that level, with the next upside price target at 55.5. We have the full bull trend, so stay bullish as long as we're above 49. And if we break down below 49 at this point, it is going to look extremely bearish, and we have that very critical risk level at 47. So below 47, you are instantly getting more risk off and possibly even shorting this ETF, but it is very unlikely while we have the full bull trend. So I do favor the breakout in the ARK ETF to break above 52 and reach 55. It's more than likely going to happen by month end. On the VIX, we were up 2.15%, but the VIX now has 3 closes below 20 in the last 4 days, which is telling us that fear is completely leaving this market as we enter the bull trend. Remember, VIX below 20 is bullish, and we're not getting bearish until we see the VIX spiking all the way back above 24. On Bitcoin, we're currently down 1.28%, and Bitcoin is coming back down to retest the breakout at 24,000. So if we do get a very bullish bounce off this support, we are likely going to see a very impulsive rally up to about 28,000. Keep in mind the Bollinger Bands are squeezing, which is severely limiting downside and is going to tell us a very big move is coming soon. And Bitcoin now has the full bull trend with all of the moving averages stacked to the bull side. So Bitcoin has extremely critical support right around 23,600. So stay bullish as long as we're above support and get ready for a very impulsive bull rally that is likely coming to Bitcoin soon. Continuing with our big tech hot stocks, we have Amazon, which was down 0.26% and continues to bash its head against that resistance at 144. And it's not going anywhere until we can break above that level, with the next valid upside price target at 152 once we break above 144. You're staying bullish as long as we're above 138, and below 138 you're looking for a retest of 134, which should be very strong support now that the 20 simple moving average is also in that zone. On Microsoft stock, we were up 0.53%, and Microsoft found resistance today at the 200 simple moving average, but as long as it's above 290, it is very likely going to the next price target to fully close the gap at 296. And then we can start to see Microsoft marching up to close the gap at 309. Downside support and risk levels is at 290, because below 290 you want to get a lot more risk off for the gap close at 283. We have the full bull price action and trend in Microsoft, and this is a market moving stock, so this is very bullish for the whole entire stock market. On Nvidia stock, we were up 1.73% as Nvidia has the full bull price action and full bull trend, with the next valid upside price target at 192 and then 196. And if we get the bull breakout above 196, we'll likely see Nvidia start trending up to about 230. Critical risk levels on Nvidia are at 186 and 180, so stay bullish as long as we're above that critical support. On Tesla stock, we were up 3.1% today, and Tesla closed back over that very critical resistance at 900, and it's also starting to break back over the 200 simple moving average and also has a new daily closing high. So it is very likely that Tesla is trying to get to 970 in a hurry. Stay bullish as long as Tesla is above 904, so set your risk at that level. And if we break 904, we are very likely coming back down to about 864. So get a lot more risk off below $900, but stay bullish while we're above 926. On Apple stock, we were up 0.63% as the magnet at 174 continues to pull price action higher to fully close that gap. And I do expect that to be some very critical resistance for Apple stock, because once it closes that gap, it will be flirting with brand new all-time highs. Remember, in bear markets, you don't hear words like all-time highs, so the fact that Apple is banging its head against what could be a brand new all-time high tells you in itself that we are very close to going right back into another bull market. Respect that resistance at the gap fill and manage your risk at the support level at 170, because below 170 will very likely close the gap at 166. On the financial sector, we were flat on the day, and we still have the full bull price action and trend, so the financials are still looking very strong at this time. The industrials were up 0.24% today, and we still have the full bull price action and the full bull trend. The healthcare sector was up 0.5% with the bull breakout above resistance, and we do have the full bull trend. The energy sector was down about 1.95% after getting rejected from resistance and coming back down to the support at the 50 EMA. If we lose support and break down, watch out for a possible double top. So jumping back over to the S&P 500, keep in mind that we now have very good reason to believe that we are going right back into a bull market, even though we still do have to respect the fact that if we lose support, we could still have a pretty substantial drawdown from Friday's close. Remember that facts are facts, and we let price action do all of the talking right here on the Stocks channel. So do not believe for 1 second that if we break down through support and start losing some very critical risk levels, that we are going to just blindly stay bullish because we're permabulls. Follow price action, trade with the direction of the trend, and learn to manage your risk, and you are going to do very well in this market, and that is exactly what I'm teaching you to do. Remember, on the Stocks channel Discord, I go into a lot more detail that I don't have time to cover in every single episode. So if you're needing more help following price action and learning how to manage risk, you need to join the Stocks channel Discord server. Also, don't forget that I do have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.